All right. Hello and good morning, everyone. Welcome to another episode of Trading Bitcoin with your host, Tone Vays. Can't believe how late I am to start this stream. It's just crazy day. All right, let's go to screen share. Here is my upcoming calendar. It is ridiculously insane. I will be in Dubai speaking at a reasonable amount of events. Coin Agenda Expo 2020, which is a year late, Golf Blockstream Week, AIM Summit, World Blockchain Summit, and then, of course, Understanding Bitcoin along with the WOW Summit, which I will also take part in. They're in the same building. Please come and support Understanding Bitcoin. I don't know if I'll make it to the Amir Khan fight because I'm also going to be on the yacht event. So those that are coming to Understanding Bitcoin, I had to change a couple of speaker pictures. Some said no, new ones said yes. I am planning on being on this yacht October 16th. Hopefully it doesn't conflict with the fight and I may still be able to make the fight. But please check that out, come out and support. We still have spots. It'll be a small event. It's going to be probably closer to an unconference where the agenda will be driven by those in attendance based on what they need. They need help with Lightning. They need help with hardware wallets. You want to learn how to build a token on Liquid, all kinds of awesome stuff. Running a node, that's the kind of stuff we're doing. All right, charts. Charts. I haven't done charts in a while. I think I did a quick video on Saturday. On Friday, we did the news show. Let's dive into charts a little bit. How's the live chat doing? There will be a private Q&A following this stream. Private Q&As are going to end at the end of the year. It didn't work out how I wanted. I got to come up with another solution. Yeah, Tone should start 2 new shows. Perfect. Waiting for Tone and mic check. Yes. Don't forget technical issues. All right. So let's see what is going on. So the weekly chart did not go high enough to reverse the MRI counts. However, if we hold this moving average, we will reverse the MRI count this week and then get a green star candle next week. So for a perfect trading opportunity, we want this week to be boring. We don't want a giant rise because that creates a little bit tougher trades on a long-term weekly timescale. You want a green star candle like this because this green star candle showed up in the very beginning of this candle. You want that to take place next week, not this week. For the time being, we are above all 3 weekly moving averages. My moving averages on the weekly are the 7, the 20, and the 50. Okay, as you can see, none of them are crossing. And they are all somewhat rising except the 7, but the 7 will start rising in a week or 2, even at current price level. So as long as these moving averages don't cross each other over, everything is looking good. Now, here is what I wanted to spend a little bit of time on. You know what? I'm going to get back to that. Let's talk about the daily chart first. The daily chart is looking great. I'm going to delete this blue line. That was the very critical line that we needed to avoid breaking. We are above all 3 moving averages. Not all of them are rising. They're not all in the proper order. So the daily chart is not yet 100% bullish, but it certainly is bullish enough for a bullish trade. You can see the green star candle started. This green star would have shown up at the very early stage of that candle. This candle broke both moving averages, and we are back to where we were over here, where I was pretty damn bullish, and this was like the China news banning Bitcoin, I believe. So things kind of went to shit a little bit here, and or it might have been over there. I don't remember where that happened, but we are looking great. This is a nice M-shaped pattern. I'm not a big believer in double bottoms, but this is somewhat okay, especially when it's being supported by a moving average. And I am pretty damn confident that we are going to approach the all-time high area in the very near future and then have a little bit more of a pullback. So these arrows, we can just slide them over a little, right? We can slide this over to there. We can slide this over to here. And this one, we'll just have to, adjust a little bit like that, okay? So this is my current projection as to where we're going. I'm going to go ahead and delete this arrow as the charts are getting cluttered. Okay, that's the daily look. Let's look at the short term. This is our 1 hour chart. The 1 hour chart is back about 48. We were looking really nice yesterday afternoon when we, rallied all the way past 49,000, took a little bit of a dip, and now we are back. And I think this is a very good consolidation. 4 hour chart. Anything with the MRI on a 4 hour? Not really. I don't think there's anything interesting here. Yeah, there's really not all that much here. Beautiful green star candle. Remember, this green star would have shown up the moment you start breaking the prior candle's high. Unfortunately, it couldn't hold the breakout area, pulled back a little bit. Trading's not easy. Don't let anybody tell you otherwise. See, this is the kind of green star candle you really want right here. Again, the green star candle shows up the moment you start breaking the prior swing high, the prior candle swing high, and then you can see it gets sustained. And you went up, straight up. Well, almost straight up, right? So you kind of went straight up for almost $4,000. Okay, this time it was like 8% or something. This time it didn't go up that much, obviously. It only went up $1,000. But then on the back end, like once you're up a fair amount, you got to set that break-even stop loss. Like this is your home run. That's your, bunt single if you're a baseball player. This is your bunt single. You got on base. You might have got caught stealing after, so you got your batting average up. You didn't help the team. So you can chalk this up to, you made a good trade. The trade didn't last. You didn't lose any money. Assuming you put in that break-even stop loss, you fight another day, But this one here, that was, a single or a double that turned into a triple. Like that's kind of how you have to play. Swinging for home runs is only going to get you banned for substances pretty much. Okay, now I want to talk about this. There's going to be a private Q&A in about 5 to 10 minutes. I want to talk about this. So I've been looking at my Consensio chart some more. I've been talking to my friend Mark, who is probably in this live chat. I know he's in my private Q&A. He was a big-time student and a consulting client of Tyler Jenks. So he knows Consensio in and out. And after chatting with him and looking at the charts, I am going to alter this chart to a 4-day chart instead of a 3-day chart. The 3-day chart is not as clean, and I'll show you the difference, okay? The 3-day chart is just not as clean. We can go back. You know what? I'm going to actually make this bigger. I'm going to, do this. And it just whipsaws you around a little bit more than the 4-day chart. The 4-day chart is just so much cleaner. Like, look at this area over here on the way down in the 2018 market. See how we're breaking the long-term moving average. We're breaking it here. We're breaking it here. And we're not really getting anywhere. There was a nice, reversal over here. We broke it for a long time. And then again, right here is just not as clean. And we watched it right here. you know, go a little bit outside the bounds. But watch what happens when I turn this chart into a 4-day chart. Because Tyler used to use Consensio on a weekly scale in traditional markets, even the futures markets that trade, you know, pretty much 24/7. So now I'm going to change this to a 4-day chart. And I think I'm going to stay with the 4-day chart. Look how much cleaner the 4-day chart is. Ignore my annotations, right? So the 3-period moving average did not cross the 30-period moving average in this current drop. We perfectly got supported by the long-term 30-period moving average. We broke it very cleanly back in August, and we broke it very cleanly. We're looking at the longer-term moving average, and we're also looking at the crossovers. Cleanly back in May. We did not cross the 3-period, did not cross the 9-period, and I am going to use 3 and 9 versus Tyler's traditional 2 and 7. I just like the 3 and 9 a little bit more. Also, because I have like code here that's not allowing me to use the 2-period moving average, and the 3 and the 7 are just too close to each other. So I chose, you know, and I like number 9, as you guys know. One of my favorite numbers. So look, we didn't cross here. We didn't cross here. When we did cross, we crossed and sustained. And right now we're crossing again. But if I go back, again, no cross here, no cross there, cross here that actually got sustained. This area here was a quick cross, went back over the next day between the 3 and the 9. And beautiful held of support by the 30-period. Clean break, clean break. Again, clean break on the 3 versus the 9. Not so clean over here, but you know, nothing is going to be perfect. But it's the 30-period moving average that I'm really curious. Look at this. Another clean break, clean resistance, clean support, and then clean break. Again, another clean break. It's those, you know, whipsaws that I don't like. This is borderline, but it's pretty clean support. This is definitely a non-clean break that was not sustained. And this is, again, borderline that it was clean because there was not like just a little bit of a candle closed above on a declining 30-period and then immediately went back down. So you can see how this 30-period moving average on a 4-day chart is incredibly clean. Here's another example, but also here the MRI would have, you know, held you back a little bit. So this is a this could have been totally manageable. And then once again, beautiful support, beautiful support. I mean, we can go all the way back for like years. Again, borderline, but I'm okay with this. You know, a close a little bit below and then immediate a reversal back to the upside. This area here is a little bit troubling as we are kind of rising, staying below. But, you know, multiple months go by and then we get a clean break back over, you know, nice support all through here. And again, awesome resistance, awesome resistance. It's just such a cleaner chart. All right, I can't be doing that all day, but let's not. So now that we are switching to a 4-day chart, this is my bet with Joe Saz. I win on a, you know, sustained close below 40. I've thought about what sustained close below 40 means, and from now on, my bets will be as follows: 24 hours trading, like the price of Bitcoin needs to spend 24 hours below $40,000 out of a 3-day period. And it doesn't have to be in a row. As long as it trades for 24 hours within 72 hours below 40, then the bet is lost. It doesn't matter where it closes each day. It's that's what it means to me. So the opposite is also true. As long as Bitcoin trades above $55,000 for over 24 hours within a 3-day period, doesn't have to be in a row, then Like if it spends a full consecutive 24 hours above, then the bet's won. Or it's just, trades most of the day and then most of the day again without closing, and then the bet's still won. That's basically how I will treat these. So now let's adjust these numbers based on a 4-day chart. By the way, whether I'm using a 4-day chart or a 3-day chart, right now, this is for me a 100% bullish allocation in Bitcoin, according to Consensio. Okay, so the first thing we need to adjust is this here. This is no longer 100% bearish. Okay, the bearish part wouldn't actually show up until the long-term moving average is declining. So this now becomes maybe 50% bearish, or most likely 100% cash. I'm going to stick to cash. I don't want to spend too much time right now because I got to get to the private Q&A. We can adjust these later, but if it's 100% cash, it kind of has to now go yellow. Background could be light, border could be dark. I can talk about that later. 100% cash, because probably even like here. Well, we can do it here. Doesn't matter. This area. Now the bullishness, again, doesn't come in until we start breaking everything. So right here, we don't actually get 100% bullish. We're actually going to get close to maybe 80% bullish. And the reason why it's not 100% bullish is because the long-term moving average is not yet rising. You need it rising. You need the long-term moving average rising. You need the price to be above all 3 moving averages, and all 3 moving averages need to be rising. Then and only then do you end up with a 100% bullish allocation. Okay? And that is here. And that's what just happened. Okay? Assuming this candle doesn't crash, right? We are assuming that this candle, the next 3 days, we stay up there, and then this crossover will be solidified. I'm going to be, because I'm fundamentally crazy bullish, this is where we get 100% bullish allocation. Okay? So what do we do with the rest? Well, with the rest, this here is where we start lowering the allocation. So we were 80% bullish, and we probably never even made it to 100% bullish, because while we're rising, the long-term period is not yet rising. Okay? And here is where we lower it to 50, 60. Okay? Because we just dropped below all the moving averages, and now they're crossing over. So now we are dropping that allocation some more at the crossover. Okay? And now it kind of stays that way. I'm going to delete one of them because it's just too much. And now we start to raise that allocation because we are bouncing off this average, and it is now rising. So here on this green candle is where we raise it back to approximately 75%. Okay, on this candle. Now, this candle went through all the trajectories, right? Because when this candle starts, you're like 50% invested. But by the time the candle ends, you're at 75% invested. So you can just go through the transition of that candle. So this is what I'm going to do there. Because at some point, by the time this candle ends, it's close to 75. By the time the candle starts, you're probably still at 50. So somewhere during this candle, you are raising that allocation. Okay, so I'm going to stick to, and these should probably be greenish because we are still in bullish allocation versus 100% cash. And then there could be bearish allocations as well. Okay, but those should be very reserved for bear markets, which we are not. We are not in the bear market, so there should not be a need for shorting. Okay, that is it. That's all I wanted to say. Hey, guys, come out to Understanding Bitcoin in Dubai. Stick around for the financial summit. You can see old presentations. All these links are in the video description. More info on Confiscatable coming up. This is my calendar of events you can support through products and services by, if you are interested in the MRI indicator, you can read about it here, and one-time fee for access. Of course, the on-demand videos on learning how to trade. There is also a free section on learning how to trade. All right, guys. Thank you all so much for watching. I already have a couple of people in my private Q&A, and I'm going to go ahead and do that. The private Q&As do come out publicly over the weekend, and hopefully see a bunch of people in Dubai soon. All right. Thanks, guys.